Hi everyone, welcome back to Consolidation chapter. Today in this video we're going to see this illustration 5 of the ICAI study material, and this question is very important from the dividend adjustment point of view because here we're going to see all the assumptions that we can make regarding the source of the dividend, from which profits the dividend has been distributed. Yeah, we need to know that whenever we have dividend in the question, we need to know whether it's pre-acquisition dividend, post-acquisition dividend, or both in proportion. And we will get to know that only when we know the source of the dividend. If question tells you directly what is the source of the dividend, then you can easily classify the dividend. But if the question is silent or not telling you directly, then what you have to do, you have to make the assumptions. Yeah, what are the assumptions and how will we do that? That's what we are going to understand mainly in this video. Okay, but we'll do that at last. First, what are we going to do is, first we'll read the question and we'll make one assumption. Okay, most appropriate assumption you can say. We'll make one assumption, we'll solve the entire question. See the requirement over here, record the entry in the books of H Limited in respect of the dividend. Okay, we'll do that. But not only this, we are also going to see the working notes and see how the dividend adjustment will flow in the working notes, in the AOP, in the cost of control, in the consolidated profit and loss and all. We're going to see everything. Okay, and then at last we are going to discuss the assumptions. Is that okay? Right. So let's start the video and let's go through the question first. Now see here, H Limited acquired 3,000 shares in S Limited at a cost of 4,80,000, the cost of the investment, on 31st July 2021. This is the date of acquisition, which is in the middle of the year. Fine. Now here in this sentence, they haven't given you the percentage which holding company has acquired. They have given you the number of shares. So what you have to do, you have to find the percentage of holding. How will you do that? It's very simple. The number of shares they have acquired divided by the total number of shares of subsidiary company. You will just take a fraction. So in the next line, see here, the capital of S Limited consisted of 5,000 shares of rupees 100 each, fully paid. So you have how many shares have been acquired by holding company, which is 3,000. Okay, 3,000 shares divided by the total number of shares of subsidiary company, which is 5,000. So divide by 5,000, you will get the holding percentage, which is equal to 0.6 means what? 60%? Yeah, 60%. So it is 60%, the percentage of holding. Fine. And then see here, they are saying the profit and loss account of this company for 2021 showed an opening balance of 1,25,000. Opening balance means the first day of the year, not on the date of acquisition. The date of acquisition is in the middle of the year. And here you have 1,25,000, which they have said this is on the first day of the year. Now we have to verify, you have to see what is the year we have over here. Okay, we'll see that. And then see, and profit for the year was 3 lakh. Now this is very important line. Okay, let's just read this again. And profit for the year was 3 lakh, and then at the end of the year it declared. Who declared? Subsidiary company declared a dividend of 40%. This is a very critical line. They are saying that the profit has been earned, current year profit 3 lakh, and then at the end of the year, last day, the dividend has been declared of 40%. So you have to understand from this, the most appropriate assumption over here regarding the dividend would be the most appropriate. The dividend is of the current year. The dividend has been, the profit which have been used for the dividend is of the current year only, because the way the question has been given, this sentence, profit for the year was 3 lakh. The subsidiary company earned the profit of 3 lakh, and then dividend has been declared at the end of the year. So you have to understand this dividend has come out of this profit, So current year profit is the source of this dividend of 40%. Okay, now you have to see what is that profit, current year profit, what is that profit? Yeah, in the current year, this profit which you have been earned 3 lakh, this is not entirely pre, not entirely post. Yeah, it is proportion. See here, 31st July is the date of acquisition, isn't it? It's in the middle of the year. So that is why we have to, do the calculation and see that. We'll see that. Don't worry. Let's talk about the dividend calculation. How will you calculate the dividend of 40% means? 40% mean on the face value of the capital, equity share capital. What is the capital on the last day? It's simple. There has been no change in the capital. See here, they told S Limited consisted of 5,000 shares of face value 100. So 5,000 into 100, that is 5 lakh. So on the 5 lakh, you will calculate the dividend. See, it's very simple. 5 lakh capital into 40% dividend, so into 0.40. The dividend total that is declared and paid by the subsidiary company is of 2 lakh. Is that clear? Now this 2 lakh of the dividend, the source of that has to be current year profit 3 lakh. Is that clear? But now this 3 lakh has been earned in the entire current year, only in the current year. Yeah, so now you have to see what is the period we have in the current year. Is it pre-acquisition, post-acquisition? Yeah, that's what you have to check. See here, 31st July 2021 means what? It's in the middle of the year, isn't it? So let's see here. See, they are talking about record the entry in the books of H Limited in respect of the dividend. Okay, well, fine, we'll do that. Assume calendar year as financial year. So the opening day of the year would be what? 1st January. The closing date is 31st December, right? And the date of acquisition is in the middle, 31st July 2021. That means you have 7 months in the pre and 5 months in the post, isn't it? See here, January, February, March, April, May, June, July. 7 months in the pre till 31st July, date of acquisition happened, and then you have post acquisition period. So this 3 lakh profit is not entirely pre, it's not entirely post. You have to, of course, apply the time adjustment on this profit, isn't it? That's what you do in AOP, analysis of profit. You apply the time adjustment on this, and you know, or you say allocate the profit into pre and post, isn't it? That's what you do. Now let's see the timeline of this. See, it's very simple. Let's see the timeline and you will understand each and everything. See here properly. Date of acquisition is on the 31st July 2021. Date of acquisition, 7 months pre, 5 months post. Yes, and the first day is 1st January 2021. The last day is 31st December 2021. Why? Because the question told you that assume calendar year as the financial year. So that's what we did. Okay. And on the first day we had equity share capital of 5 lakh, profit and loss balance of 1,25,000. And then the question told you specifically current year profit has been earned 3 lakh. Yeah. Now which profit is this? Understand properly. Whenever the question tells you exactly how much profit has been earned in the current year, then this is profit before appropriation, profit before giving the dividend, on which you can apply the time adjustment. So when you will do the AOP, when you will do the statement of net asset, you should not add back the dividend. The first step, adding back the dividend, will be skipped. It will be skipped because you already have the profit before appropriation. Dividend has not been adjusted in this profit. Is that clear? So that is why first step in the AOP, adding back the dividend, will be skipped. Is that clear? So this is the current year profit, and then the subsidiary company declared the dividend of 40% on equity share capital, of course. So 5 lakh into 40%, yeah, 5 lakh into 40%, that is 2 lakh. Now what was the source of the dividend? The source of the dividend was what? Current year profit, isn't it? Given out of current year profit. There was hint in the sentence. So what you will do? It's very simple. You will just time apportion the dividend. You have this current year, 7 months pre, 5 months post, date of acquisition in the middle. Here the company did not have the control. Here company had the control, isn't it? Pre-acquisition period, post-acquisition period. So just take a ratio of that, 7:5. And in this ratio, you will time apportion this 2 lakh. You will time apportion the 2 lakh, right? See here, pre-acquisition dividend will be 2 lakh. Yeah, see here, time apportion the dividend, 2 lakh you will take, okay, into 7 divided by 12. That's equal to, see, 1,16,667. Yeah, that's what you will take. That would be the pre-acquisition dividend. And of this, how much is holding? 60% is the holding share. That is 70,000. 70,000 is the holding share. And then the remaining minority interest. But we are not concerned about minority interest. We will not do anything regarding minority interest. Just ignore the minority interest. Is that clear? You will not do anything regarding the minority interest in the working notes. No, nothing. Just the entire dividend will be dealt in AOP. But in the other working notes, you are only, concerned about the holding share of dividend, this 70,000. Is that clear? Yes. And then the next dividend you have, the other part, post-acquisition dividend. How will you calculate? It's simple. Just time a portion. 2 lakh was the entire dividend which subsidiary company gave. Now 5 months is the post period, so into 5 divided by 12, that's equal to 83,333.33. Of this, yeah, 83,333. Of this 60% is the holding share, so into 60, yeah, 60%, that's equal to 50,000. So 50,000 will go to holding company, and the remaining 50,000 minus 83,333, that will go to minority interest. Yeah, of this dividend, 60% holding, 40% minority, 60% holding, 40% minority. Yeah, that's what you will do. The journal entry is very simple. You all know the journal entry. I have already explained the journal entry in the dividend adjustment video. What is the journal entry? Simple. Pre-acquisition dividend is the recovery of the cost for the holding company. Post-acquisition dividend is simple income which will go to profit and loss. But pre-acquisition, this will go to investment account. Yeah, investment account. You will reduce the cost of investment. So how will you do that in journal entry? Simple journal entry. Simple. Holding company, in the books of H Limited, in the books of holding company, money has been received in the bank. So bank account has increased, bank account debit 1,20,000, 1,20,000, right? 70 and 50 in total, that is 1,20,000. And the pre-acquisition dividend will be credited to the investment account, 70,000. This amount into 60%, you got 70,000. And then the post-acquisition dividend 83,333 into 60%, that amount will go to profit and loss. Simple. Yeah. So till here the illustration 5 is completed. Yeah, that's all the requirement was in this illustration, in this question. Yeah, record the entry in the books of H Limited in respect of the dividend. But now we will not finish the video over here. I will not stop the video over here. We are going to go further and see all the working notes regarding this and how the effect will be flowed in there. Yeah. So let's see the working notes now. Now here we have the working notes. See, it's very simple. Let's see the first working note, that is statement of net assets. Yeah, you also call it as analysis of profits, AOP. So how do you do this? It's very simple. See here you have pre-column, post-column and date of consolidation. Now this date of consolidation column is just for the convenience, just for the comparison. Okay, there is not much purpose of that. And then here, what do you take first? You first take the opening balances over here. What was the opening balance? Yeah, on the first day of the year. But later, after doing all the calculation and everything, at last you will get pre-acquisition net asset. What are the net assets on the date of acquisition? Is that clear? Yes. And in the middle, you take the post. Okay, post reserves, right? Profit and loss, general reserve, whatever you have in the question. Now in this question you only have profit and loss, so that's why I have only taken one sub column, that is profit and loss column. Fine. So what did we have on the first day? On the first day, see here we had capital of 5 lakh and profit and loss balance of 1,25,000. So that is what I have taken over here. Okay, fine. And there has been no change in equity share capital, so 5 lakh at the end, simple. And profit and loss, what has happened? The question has specifically told you that in the current year 3 lakh has been earned by the subsidiary company. Now we are talking about subsidiary company, isn't it? In AOP we deal with subsidiaries profits, subsidiaries net assets, right? So 3 lakh profit has been earned in the current year, exactly the question have told you. Now this profit is before appropriation of dividend. The dividend has not been adjusted in this profit. Is that clear? This is profit before appropriation of dividend, and that is what we need to apply the time adjustment. In this question we have time adjustment, isn't it? The acquisition has happened in the middle of the year. Yes. Is that clear? Right. So dividend has not been adjusted. Okay. So now what we do regarding the dividend in AOP, you all know that the AOP, analysis of profit, the first working notes, plays the game on 100% dividend, entire dividend. Yes, we know that. What is the first step that we do? The first step we do is add back the dividend paid from where it was deducted. Yeah, from where it was deducted, and usually from the post column. We always do it from the post column. We add the dividend paid to make the profits before appropriation of dividend, so that we can apply the time adjustment. You all know we can apply the time adjustment only on the profit which has been evenly earned throughout the year. So that is why we have to add back the dividend. But now in our question illustration 5, here exact profit which have been earned in the current year has been given, which is already before appropriation of dividend, So that is why the first step will be skipped. You will not add back the dividend. If you add back the dividend, then that would be wrong. So what you have to do is directly move to the second step, apply the time adjustment. Now in the previous question we did not have the time adjustment. Yeah, in the first dividend question which we solved, there was no time adjustment. That is why we directly moved to the step 3. The same scenario was there over there, yeah, in that question. But here time adjustment is there in the question, so we will do the time adjustment, and then we will go to the step 3, deduct the dividend paid based upon its source. All right, yes, you all know that. So see here, let's apply the time adjustment. How will you do that? Let's just first make a sum. Okay, so see here, 5 lakh plus 1,25,000, that is 6,25,000 net assets, and 3 lakh profit as it is. Now you will do the time adjustment. Now see in the question, how will you apply the time adjustment? It's very simple. In time adjustment, what do? You just see what is the pre-acquisition period, 7 months. So you will take 7 months of this reserves or from this profit and put it in this column. Yeah, that's all you do. Minus here, plus here, right? See here, time adjustment plus minus. That's all you do. 7 months pre, 5 months post, right? This is the ratio, 7:5. So what you will do, see here, the profit which you have taken 3 lakh in the post column, it is not entirely post acquisition profit. No, some of that is pre acquisition. So that is how we apply the time adjustment. Yeah, what we do, 3 lakh, yeah, into, can you see that, 3 lakh into 3 lakh into 7 divided by 12, that's equal to 1,75,000. Yeah, so 1,75,000 minus, and here you will add the 1,75,000. Is that clear? That is time adjustment, simple. So you have correctly apportioned the profit, that is 625 plus 175, that is 8 lakh, and 3 lakh minus 175, that is 1,25,000. Is that clear? Yes. The third step regarding the dividend is what? Deducting the dividend paid based upon its source. Now in the question you found out, yeah, in the question you found out and you did a calculation that pre-acquisition dividend is this much, post-acquisition dividend is this much. This is 100% dividend we are talking about, 100% dividend. So that is why you will deduct them from the pre and post column. See here, dividend paid minus 1,16,667, and here minus 83,333. Pre-acquisition dividend, post-acquisition dividend. Is that clear? See, both profits have been used. Based on our assumption, current year profit has been used, and the current year profit is, some profit has been earned in pre-period and some in post. So that is why the dividend source is like that. So we have to deduct from both profits, pre-acquisition profits as well as post-acquisition profits. Yeah, that's what we are doing now. We are deducting from both the columns, pre-acquisition dividend, post-acquisition dividend, and then we'll get the correct net assets, 6,83,333 and 41,667. Is that clear? Yes. So after deducting the dividend paid, this is the final answer you have. Now what you will do, you will take the holding share and the minority share. Yeah, see here, 683,333, 60%, that is 4,10,000. Okay, the net asset that is owned by the holding company and the net asset that is owned by the minority is 2,73,333. Is that clear? And here also 41,667, 60% 25,000, 40% 16,667. This is how you have to do the calculation regarding the dividend paid by the subsidiary company. Clear? Yes, simple. See the note over here, what I have written over here. See, dividend paid is not added back because in the question current year profit before appropriation is given, already given 3 lakh. So that is why directly move to the step 2, apply the time adjustment, and then deduct the dividend paid from its source. Okay, from its source. Yeah, from its source. The source was, this is from pre-acquisition profit, so pre-acquisition dividend. This is from post-acquisition profit, so post-acquisition dividend. That's how you have to do it. Fine, easy? Yes. Now let's move to the cost of control. Now here we have working note number 2, the cost of control. But before going into that, I just wanted to let you know the assumption I have made over here. See, assumption, holding company has not done the accounting of the dividend. Yeah, you all know regarding this. See here, we have discussed this in the first video of the dividend adjustment. See, what I told you, that whenever we have to do the treatment regarding the dividend that is paid by subsidiary and holding company has received it, then that treatment will happen in the consolidated financial statement in 2 working notes, working note number 2 and working note number 4, right? Yeah, but you cannot do directly and go do something. No, not like that. First you have to see what has happened in separate financial statement of holding company, and then only based on that, what has happened over here, what is the position over here, based on that you have to give the effect in consolidated financial statement. Yeah, if the accounting has happened, if the accounting has not happened, wrong entry has been passed. Yeah, there are different scenarios, right? So here the question was silent. Yeah, in this illustration 5 the question was silent, and what assumption I have made over here is that nothing has been done in the holding company. Of course, in the full-fledged question, if the question is silent, you will not do that. You will say that you will assume that wrong entry has been passed, yeah, wrong treatment has been done, and you will rectify. You will rectify this effect you will give. But what I have assumed over here, to make you understand some things, I have made an assumption that no accounting. Yeah, nothing. Yeah, you see here, accounted for it. I'm saying this assumption is accounting has not been done. If accounting has not been done, then what you will do? You are an accountant. You know how to do the accounting, right? You are a senior accountant, chartered accountant. So you will do the correct accounting. Simple logic. You will do the correct accounting. What is correct accounting, sir? Correct accounting is simple. Pre-acquisition, credited to investment account, reduce the cost of investment, and post-acquisition dividend, take it to profit and loss. Simple. So in consolidated financial statement, what you will do regarding pre-acquisition, how will you give the effect? You will not pass the journal entry, na? How will you give the effect? You will reduce it from the working note number 2 cost of control regarding this pre-acquisition dividend, and post-acquisition you will add it in the consolidated profit and loss. Yeah, here you have to increase the profit, here you have to reduce the investment, so reduce it from the cost of control, and here add it to the consolidated profit and loss. Simple. You understood the logic? Yes. If accounting has not happened, that is the assumption I have made, because I've already explained all these things to you. Yeah, but now I want to show you what you have to do if accounting has not been happened. Yeah, that's why I have made such an assumption. Holding company has not done the accounting of the dividend, so you will do the correct accounting treatment. Okay, fine. So you know that, see here, cost of investment, what do you do in cost of control? Cost of investment minus pre-acquisition net asset that is owned by the holding company of subsidiary. Yeah, so let's do that. See here, cost of investment 4,80,000, it was given in the question, isn't it? 4,80,000. Let me just show you, where is the question? Yeah, see here, at the cost of 4,80,000. So just take that 4,80,000, that's the cost of investment. From that, what you will do? Minus pre-acquisition dividend. Will you take 100% dividend? Will you take 1,16,667? No, you will take only 60% of this. That's why when you will make the AOP, all the details you can pick up from here. Yeah, it's very easy if you do it this way. So see here, 1,16,667. Yeah, 1,16,667 into 0.60, that's equal to 70,000. Leave the point, okay? 70,000. So subtract the 70,000, 4,80,000 minus 70, that is 4,10,000. This is how you have to do. It's very simple. You don't have to go back and see in the question. No, directly take 60% from here. For 4,10,000, and then net asset of subsidiary owned by the holding company on date of acquisition. Yeah, so you will have it over here, 4,10,000. You see how simple this is? Minus 4,10,000, this is 0. No goodwill, no capital reserve. Clear? Yes. Then let's see minority interest. Working note number 3. Now, how will you do the minority interest? Simple, sir. We all know how to do the minority interest working note. Just take minority percentage of everything. What everything, sir? See here. Minority 40%. Yeah. Pre-acquisition, post-acquisition. 2,73,333. See here. Share of pre-acquisition, and then share of post-acquisition 16,667. That's it. That's all minority interest is. Yeah. 2,73,333 plus 16,667, that's equal to 2,90,000. That is the minority interest which will be taken to the balance sheet, consolidated balance sheet. Yes, easy. Then we have working note number 4, you know, the consolidated reserves and surplus. We have only one over here, that is profit and loss, no general reserve, nothing. So see, how will you do it? Holding company, it's not there in the question, that detail is not available, so that's why I have taken nil. Okay. And then you will add the share of post-acquisition profit of the subsidiary company, which you will get it from AOP. Everything, all the details, most of the details you will get from AOP. See here, holding company 25,000. Yeah, holding company share of post-acquisition profit of the subsidiary company is 25,000. So 25,000. Clear? And then you will add the post-acquisition dividend. Post-acquisition dividend. Is it entirely? No. 83,333 into 0.60, only 60%, that is equal to 49,999.8. So let's just say 50,000. Yeah, 50,000. 50,000 you will add. Simple. So 25 plus 50, that's equal to 75,000. So do you understand now? You understood the most important part over here. If the holding company has not done the accounting of the dividend, then you practically saw what you have to do in the working note number 2 and in working note number 4. Yeah, how you will give the effect. You will do the correct accounting treatment. Pre-acquisition dividend, what's the correct accounting treatment? Reduce from the cost of investment. No accounting, yeah, nothing has been done. So you will do the accounting. Here also, post-acquisition dividend which holding has received, nothing has been done regarding that in separate financial statement. Here you will give the effect. You will do the, no, not the accounting, you will give the effect at the post-acquisition dividend. You will increase the holding profit. Is that clear? This is what you will do. But if the question told you that, you know, holding company has done everything, all the correct accounting treatment has already been done, then what you will do? Of course, here you will deduct and everything, but in cost of control, nothing. You will not touch anything. You will not do anything. This line will not come, pre-acquisition dividend. This post-acquisition dividend will not come if the question says correct accounting treatment has been done. Is that clear? If let's say, for example, the question says that, you know, the holding company has taken the entire dividend. How much dividend they received? The holding company received 1,20,000 dividend. If the question told you that the holding company took entire 1,20,000 to profit and loss. Bank account debit 1,20,000 to profit and loss 1,20,000. If something like this happens in separate financial statement of holding company, then what you will do in consolidation? In consolidation, error has happened. Yeah, I mean, it's an error, right? It's an error. So what you will do? You will only rectify the pre-acquisition dividend. You will only rectify 70,000, which is the pre-acquisition dividend. Yeah, you will, what you will do? See, profit and loss, you will debit the profit and loss by 70,000, you will decrease the profit and loss by 70,000, and you will credit the investment account by 70,000, which did not happen previously because of the error. Yeah, isn't it? That's a journal entry. But in consolidated financial statement, reduce the investment, reduce the profit and loss. Yeah, this entry you have to pass. But in consolidation, you cannot pass this entry. You cannot pass this entry. You have to give the effect. So how effect will be given? Simple. Rectification effect is very simple. In cost of control, you will reduce pre-acquisition dividend 70,000. You will do this. And here in consolidated reserves and surplus minus pre-acquisition dividend wrongly credited to profit and loss, you will subtract 70,000. You have reduced the profit, you have reduced the cost of investment. That's the rectification effect. Is that clear? So you have understood all the scenarios. Rectification, if correct has been done, you will not do anything. If nothing, no accounting has happened, then you will do the correct accounting, which I have done over here. Is that clear? Easy? Yes. Now let's discuss and see what are the different assumptions that we have regarding the source of the dividend. Okay, the working notes and everything you understood completely. Let's see the assumptions of source of dividend. Now here we have different assumptions that we can make regarding the source of dividend. So see, it's very simple. The first assumption that we have is only pre-acquisition profit is used to give out the dividend. All right. So for example, let's see that in the illustration only, in our previous illustration only, see this 2 lakh dividend, we can assume that this 2 lakh has given entirely out of pre-acquisition profit. How much is pre-acquisition profit in our example? How much was it? Pre-acquisition profit 1,25,000 was already there on the first day. That is pre-acquisition profit. And also the current year, out of the current year, 175 was pre-acquisition profit. We applied the time adjustment now. From here we removed and added it over here. So in total 125 plus 175, 3 lakh is the pre-acquisition profit in this illustration 5. Okay. Yes, it's 3 lakh. So if the dividend is entirely given out of pre-acquisition profit, then you will subtract here minus dividend paid 2 lakh. 2 lakh dividend entirely given out of pre-acquisition profit, then you will subtract entirely from the source. The source is pre-acquisition profit, you will subtract over here, only here, minus 2 lakh, that's it. And then of course these figures will change, and so the other working notes. Is that clear? Yes. And then the next assumption is only post-acquisition profit. Is this possible? Is this assumption possible in our illustration? See here. In our illustration, this illustration 5, how much was the profit in post-acquisition? 1,25,000, isn't it? 3 lakh current year profit into 5 months, right? Into 5 divided by 12. So in post-acquisition, we had only 1,25,000. So this assumption is not possible in our this illustration. Yeah, this current illustration. But you can make this assumption also. You can make this assumption that the entire dividend is only given out of post-acquisition profit. If you do that, then the entire dividend would be post-acquisition dividend. And if you do that, then what will happen? The entire dividend has to be subtracted from the source, from the post column. But in this illustration, it's not possible because you don't have enough profits. Here you have only 125. Yeah, you have only 125. So entire 2 lakh cannot be deducted over here, that dividend. Is that clear? Yes. The next assumption you have is, see here, weighted average method. What's weighted average method? When the question gives you a hint or a sentence that current year profit has been used and the date of acquisition is in the middle of the year, then what you can do, based on the date of acquisition, you will take out the ratio, as we have done in this illustration, isn't it? That's what we have done. See here, source given out of the current year profit. On the basis of date of acquisition, we found out that 7 months pre, 5 months post, 7:5. On this basis, we apportion the dividend. We time apportion the dividend into the respective amounts, pre-acquisition dividend and post-acquisition dividend. This method is called as weighted average method. Okay, time apportion the dividend on the basis of date of acquisition, pre months, post months, and you will have what? pre-acquisition dividend and post-acquisition dividend. Yeah, and you also know how to do that in the AOP also, how you will subtract pre-acquisition dividend from pre-column, post-acquisition dividend from the post-column, like that. Fine. And then you have, see, FIFO, or you can say FIFO, yeah. So here what will happen, here see what will happen is, this is also very simple. First you will use pre-profit, FIFO, right, first in first out. So what were the earliest profit, you will use that. First use the pre-acquisition profit, then post-acquisition profit. Let's take an example in that same illustration. This 2 lakh dividend was there, right? So this 2 lakh dividend, how it will be given out? First use pre-acquisition profit. So entirely, okay, so pre-acquisition profit is how much in total we have? 3 lakh. So entire 2 lakh will come out of pre, isn't it? See here, 2 lakh is a dividend. They had said first use pre-profit, so you will use pre-profit. So 2 lakh entirely from the pre-acquisition profit. So the dividend would become entirely pre-acquisition dividend. But now for example, let's say the dividend was 4 lakh. Let's say the dividend was 4 lakh and you made a FIFO assumption. Okay, you made a FIFO assumption. If you do that, then what will happen? You have 3 lakh in the pre-acquisition period. Yeah, the profit you have here is how much? 3 lakh. But dividend is of 4 lakh. So what you will do? 3 lakh from the pre, 1 lakh from the post. 3 lakh from the pre, 1 lakh from the post. Like that. Do you get it? It's simple. First you will use the pre-profit and then the post-profit. So what will happen in AOP? In AOP, see here, if the dividend is of 4 lakh, for example, 4 lakh, then you will subtract here minus 3 lakh because you have only 3 lakh profit over here, 175, 125. Yeah, 3 lakh you will subtract over here from the pre-acquisition because the source is like that. And then the remaining 1 lakh you will subtract from the post column. Is that clear? This is called FIFO assumption. Okay, FIFO assumption, fine. And then the last assumption you have, the last is last in first out, LIFO assumption, LIFO assumption. So what is this? This is exactly opposite. You all know this. See here, first use post-profit, post-acquisition profit, then pre-profit. For example, again, the same example I'm taking. Let's say the dividend is of 4 lakh. The dividend is of 4 lakh. Okay, dividend is of 4 lakh and you have over here 1 lakh 25 and here you have 3 lakh. Yeah, so what you will do? How the dividend will be given out on this, this assumption basis? How it will be given out? 125 from here, and the remaining, how much is this remaining? 125 minus 4 lakh, 275, right? So 125 will come out from the post acquisition profit and remaining 275 will come out of pre-acquisition profit, like that. So what you will do in AOP? In AOP you will subtract over here 125, okay, post. First you will use the post completely and then the remaining 275, 2,75,000 will be deducted from the pre-acquisition profit. Okay, like that. Simple. Did you understood this? Easy, right? So these are the different assumptions you have regarding the source of the dividend. Only pre-acquisition profit, only post-acquisition profit, and here weighted average, which is the most appropriate in that question, right? Because of that sentence, that hint in the sentence. And then we have FIFO, you have LIFO. Okay, now mostly in the exam what will happen is they will give you some hints on the basis of which you will have to directly take the decision easily. But sometime if the question is completely silent, no hint, nothing, then of course you have no choice. You have to make the assumption. Okay, you have to make the assumption. Is that clear? We saw one question when what happened? The date of acquisition was equal to date of consolidation. So at that time the question was exactly giving you the hint that you have to choose this assumption, only pre-acquisition profit, because there was no post-acquisition profit. So all these assumptions are nullified, isn't it? Date of acquisition is equal to date of consolidation and you got the dividend on the same day. Yeah, so what happens? So what does that mean? It means there is no post-acquisition profit, there is no post-acquisition period. Entire previous, whatever period is there of the current year, that is pre-acquisition period. So the profit which has been generated till the date of acquisition, completely pre-acquisition profit. So this assumption only, like that. Okay, so it depends upon question to question. You have to, understand that, right? So that's it for this video. I hope you have got, great clarity and idea regarding this. So that's it. See you in the next video. Bye.